Let's move on and talk about TVS Supply Chain that's in focus now. TVS Supply Chain is in focus as it has signed an MOU with Italy's ALA Group, and this is for India's aerospace and defense space. And let's get a detailed view of what this MOU looks like and the contours of the deal and how it's likely to benefit TVS Supply Chain. Let's get on board Ravi Viswanathan, who's the Managing Director, TVS Supply Chain Solutions, who's now joining us. Hello, Mr. Viswanathan. Good morning, and thank you for joining us today.
Good morning, Ankita. Thank you.
Mr. Viswanathan, what realistic revenue potential do you see over the next 3 to 5 years from this partnership with ALA, given that India's $28 billion aerospace and defense space opportunity?
Right. If you look at it at the 28 billion opportunity, the supply chain typically is around 10 to 12% of the overall spend. So that's really what the addressable market size is. And TVS Supply Chain Solutions has a very strong experience having worked in the defense sector in the UK. And therefore, we have a wealth of knowledge and a lot of technology and systems in play when it especially comes to sourcing, procurement, optimization, and distribution. And that's the capability that we think that is very relevant in the Indian context. And signing an MOU with ALA, which is an Italian-based aerospace and defense specialist in the supply chain space, gives us deep domain expertise in the aerospace space, and therefore it positions us very well as the market expands.
Sure. Mr. Viswanathan, hi, this is Kavita also joining in. When we talk about specific gaps, could you please elaborate on, the specific gaps in your current aerospace capabilities? Does ALA bridge also particularly in production supply chains and OEM relationships?
Right. I think the OEM relationship is really where ALA's partnership comes very handy, because they have a very, very strong set of relationships with the OEMs who supply, especially into the aerospace sector. Our strength comes in the sourcing, procurement, and distribution space. So the ability for us to come together and therefore create that value is really what the opportunity is. And if I look at it purely from a systems perspective, I think the TVS SCS technology platforms are very strong platforms which can complement the capability that ALA Group brings. And therefore, we think it's a fantastic coming together of two very complementary partners.
Viswanathan, how soon do you expect this MOU to translate into firm contracts? And are there any advanced stage discussions that are already underway?
Yes, I think we expect to convert a couple of opportunities going into the next financial year very early. And that would give the basis on which we can further strengthen the MOU into a more meaningful relationship, which is what we ultimately want to get to. And that's what we have said in the PR also, that we are evaluating how we can engage as two independent entities coming together. And we would look at all partnership possibilities, including possibly a JV going into the future. And that we will evaluate on the basis of the first few engagements that we will execute.
Sure. Could you also help us understand that will scaling this vertical require meaningful capex in warehousing, compliance, or specialized infrastructure in India?
Definitely, it will involve setting up of facilities which will facilitate picking, and specifically when it comes to systems integration, that is where we do sub-assemblies. Yes, it will, but early opportunities are going to be mostly in the sourcing, procurement, and the distribution space. So the CapEx, we don't expect the CapEx run up maybe into the next fiscal, but going beyond FY27, clearly there is an opportunity for us to scale it up by setting up what I would call more automated warehouses. So those are things in the plan.
The aerospace supply chains, while it is margin accretive, it's very compliance heavy. What EBITDA margin profile do you target versus your core logistic business then?
It should be at least 50 to 100 basis points better than the core logistics business, because aerospace and defense in general for us, if I look at it from a UK perspective, gives us better EBITDA margins than the rest of the business. So we expect that to be replicated going forward. And that's the thesis on which we have put together the plan for the 4% PBT and beyond as we progress beyond FY27.
Sure. Also, company has announced the acquisition of Swamy and Sons 3PL. How is this acquisition expected to alter your client mix and margin profile?
I think that's a great complementary capability that we've acquired. We have very strong presence in the production supply chain, in the industrial side, and in the FMCD businesses. FMCG has been a white space for the company, and the acquisition of TVS Swami and Sons by TVS gives us that great potential to address that white space. It is done completely through internal accrual, so it's a very good use of the funds that we have, the cash that we have. And secondly, it is margin accretive in the near term, meaning we expect it to deliver better margins going forward into the next fiscal. So as we close FY27, we expect Swamy and Sons to contribute positively, maybe between 25 to 50 bips coming on the back of the FMCG businesses that we will acquire through Swamy and Sons.
Right. On that note, Mr. Viswanathan, thank you so much for taking the time out and giving us the contours of the deal. Thank you so much.
Thank you so much, Gita and Kavita.
Right. Let's move on.